Hi guys, welcome back to another video. Purpose of today's video, we're going to run through the advanced Cypher pattern. So if you go to my website, ottrades.com, at the top tab here, click on advanced patterns, advanced Cypher, third one down here. We've also got the harmonic patterns here. But for today, we're going to run through the advanced Cypher pattern. So obviously, like all the other patterns, we're going to start off the initial price swing from the X to A leg. This is not based on any Fibonacci levels whatsoever. It is just an initial price swing in the market, and this can be up or down. This will obviously determine the D point of the pattern, so the completion point of that pattern, which if we're looking for a reversal, this initial swing will determine the direction of that reversal. The reversal is usually in the direction of that X to A swing. So in this case, the X to A swing is bullish, so we're looking for a bullish reversal at the completion point. Now the first point to be to use Fibonacci retracement levels is our B point. So if you go onto my website here, we've got all of the levels set up. The market forms a B point if it touches at least a 382 retracement of X to A, and the close price does not touch the 618 retracement of that X to A. So all this means, if you've got the price retraces back down from the X to A leg at least 382, so at least 382 here, and price can come down to the 618 level but cannot exceed the 618 level. Now, where it says about the close price, we can have the candle wick can actually exceed 618, but if price retraces within that candlestick and the candle closes just above the 618 level, it can close anywhere. Actually, it could even close above the 382. If candle closes above this 618 level, then that is still valid. However, the wick would be classed as the B point. So although the candle has exceeded that 618 level, its price has been rejected and it's retraced back above the 618 level. So we're looking for ideally a retracement into this red box here to form our B point. Get rid of this here, make it a bit cleaner. So we're looking at a retracement level between the 382 and the 618 level. Again, remember what I said about the close price of the 618 level. Candle wick can exceed 618, however, candle must not close beyond it. The market forms the C point if it touches at least a 1272 extension of X to A. Now this is kind of rare and unique to the Cypher pattern, although shark patterns also do this as well, but the C point is actually higher than the A point in this example, and it's using an extension of that X to A leg. 1272 and 1414 were put on here. Excuse me. Now, so the market forms a C point if it touches at least a 1272 extension of the X to A leg. So that's what we've just drawn on here. 1272 extension of the X point here to the A point here. So it's an extension of this leg. So you've got 0%, 100%, 127.2% here. So 1272 extension of X to A leg. And the close price does not touch the 1414 extension of X to A. Therefore, the candle wick can exceed 1414 extension, but the candle must not close beyond it. So exactly the same as we had with this B point at the 618 level, we could have a candle wick exceed this 1414 level here, as long as the candle retraces back down and closes below that 1414, then the pattern is still valid. But this price extreme up here is counted as the C point when you're doing your other retracements. this price extreme at the top is counted as the C point. So you don't use the close price, you use the price extreme as the C point, but it's still valid. If the close price if the price was to close above that 1414, then that is now invalid. That pattern is invalid. However, if we were to close just below it and the wick was to exceed it by a significant amount, that is still a valid pattern. But when you're calculating your new retracement levels, you want to pull your fib tool all the way up to the price extreme, even if it exceeds the 1414 level. That makes sense in a second. So we're looking for, ideally, candles to fall within this region between the 1272 and the 1414 of that X to A leg, and this forms our C point. Just put that to there. C. Okay. So keep that. Get rid of this here. Now finally, the D point. Market forms a D completion point by fulfilling a 786 retracement of X to C. Now this is where that what I just mentioned about the retracement, the fib retracement tool being pulled all the way up to the price extreme. So even if that candle wick exceeds the 1414, you need to pull this retracement tool up to the top of that candle wick in order to calculate the D point. So D point forms a 786 retracement of the X point to the C point. So our 786 level comes in to here. This 786 level, the D point must exceed B in order for this pattern to remain valid. D point must exceed B. Now conventionally, again with all advanced patterns, limit orders are set at the D point, and we're looking for a reversal. So we're looking for price to bounce off of this D point and move higher in the same direction of that initial price swing, that X to A leg. Now stop loss 113 extension of the X to A leg. So let me just draw this pattern in quickly so we've got it slightly more visible. Sorry. It's B to C, C to D. So again, limit order at that D point here. And our stop loss is placed at the 113 of X to A. The 113 extension of X to A. So we get our extension tool out now. We go from A to X back up to A. And we're now looking at the 113. And this is our stop loss level now. So this is our pattern invalidation point. So we know at this point the pattern's been invalidated and we should exit the trade. The trade is no longer valid. Price has moved lower, so the pattern's no longer valid, and we're expecting price to continue down. Or the odds are against us in price retracing back up to hit our target point. So that is our invalidation level. The 113 of X day is our invalidation level. Cypher targets 382 of A to D and 618 of A to D. Pretty conventional. So A point here to the D point here. So we're looking for price to retrace off of this level up to the 382 point and the 618. So that's our two target levels here, 382 and 618. Now again, same with all advanced patterns. The conventional way of trading these would be to once price retraces off of that D point here, so we set our limit order to buy the market at this D point. If price were to move in our favor, and hit our 382 level, then stop loss should be brought up to break even. We should close half of our position once the first target has been hit, and move our stop loss up to break even, so that now price has moved higher. If price moves lower, we've secured our 382 profit targets, and we have now exited the trade at 0. So we haven't lost anything on this trade. We're only up in profits for half of our position. If that's not the case, then price is only going to move higher, and we'll take our second target. So it's effectively a risk-free trade at this point. Now, before price retraces, price might actually move lower and lower and lower before it makes that retracement up to our target levels. In this instance, or even price might actually do something like this, so move higher, move towards our target, and then move lower before retracing. In this instance, you need to stretch the fib retracement tool down to the price extreme again. So in this instance, let's say price moved down to this level, you would need to re-stretch and readjust your targets for the new price extreme. So bring in your 382 targets down to here and the 618 targets down to here. Now this obviously lowers your risk to reward because you're now risking 38 pips to only make 14 and 34, 35 pips. So that obviously dramatically affects your risk to reward, but you need to the fib retracement tool is there for taking into account entire price swings, so you need to retrace that tool down to the price extreme here, and that accounts for every single pattern as well. If price moves against you, you need to re-stretch your fib level. So I hope that makes sense. Obviously go back through and back test this yourself. You can back test different stop loss levels, different profit target levels. You don't even have to use limit orders. That's just a conventional way of trading these patterns. You could wait for a confirmation in the form of a candlestick pattern. So you could look at this entire zone, considering the 113 is being classed as an invalidation point, so a point where you'll want to get out of the trade. If you're a more conservative trader, you could just wait for price to enter this zone. So if we have a bearish candles, price just keeps moving lower. Those who have been quite aggressive and entered at limit order here, we might then get something that looks a bit like this, double bottom with, say, an engulfing candle here. That would be a good entry signal to get in, and because you've not been that aggressive using the limit orders, you've waited for price to move lower, you've then increased your risk to reward. So say you get in at the close of that engulfing candle, you're now risking 19 pips to make a minimum of 46, 45, 46. Both targets 61 pips. So you've increased your risk to reward by being patient and waiting out for the confirmation. Obviously, you're going to have more opportunities if you use the limit order. As this double bottom with engulfing candle, the more filters you add onto your trading, the less likely opportunities are going to arise for you. But I'm not saying this works. This might actually be worse off than using limit orders, but that's just an example. You could be more conservative and wait for confirmation before getting into that, and that might work in your favor because you're waiting for an entry lower down, better risk to reward. So that's just an example there. So yeah, that's the Cypher pattern and how to trade it. Again, take a look at my website. All of the patterns are on here. Any questions, send me a message at the bottom here. They go directly to me. Try my best to answer them within 24 hours. Hit me up on social media again if you can't get hold of me through here. I'm available on all 3 of these platforms. Yeah, I look forward to hearing from you. I hope you enjoyed the video. Thank you for watching. Cheers, ta-da.